Good morning and welcome to this Wednesday, October 16th edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Let's jump in first and take a look at, let's see here. Actually, I cannot share my screen. Aaron, I'm going to need some help. There we go. I think I can do it now. There we go. All right, so let's go ahead and jump in here. First, we've got the Dow Jones Industrial Average yesterday up 237 points. I think this market is preparing for a breakout. I really do. I just think that this move to the upside seems to have a little bit extra pop to it. I've been waiting for a breakout. We're heading into earnings season. There's your catalyst. So I think that we've got a pretty good chance here to make this breakout, but we'll see. On the Dow, we've got to get up probably about around that 27.3, 27.400 level. So that's been an area where we have struggled in the past. On the S&P 500, the number is 3,025. We've got to get through 3,025. Haven't been able to do it yet. Yesterday, we got over 3,000, pulled back to 29.95. I still think with all these earnings coming out, this could be the catalyst to do it. We will see. The NASDAQ up 100 points yesterday, also moving up to challenge maybe this slight downtrend line. Move above 8,200 here would be bullish. The Russell 2000 breaking back above its moving averages, so still lagging the other indices pretty badly, but it has at least made a bullish move through those moving averages. Look at technology. Technology making that breakout, big break to the upside. I love that move there. We like to see technology lead. That is a good sign. Discretionary moving to a new high after breaking out above the moving averages on Friday of last week. Monday was just down a little bit with the holiday, light volume and so forth, but then came right back up again yesterday, setting another new recent high. That was good news. Communication services strengthening, industrials, I mean, really across the board. Financials getting a lift from JP Morgan in the banking space. Also the rising 10-year Treasury yield the last few days, maybe last week. So it's been a number of things, factors contributing to the financials doing well. Staples, not so much. And now, I know that there have been a lot of folks who have been nervous about the market because we've had defensive groups leading. It's okay for defensive groups to lead when the market is going sideways, consolidating. If this is truly a breakout, then I don't want these groups to lead. I don't want them to break down, and none of them have broken down. You can see Staples going sideways, but it was lower yesterday. Healthcare actually had a pretty nice day. Biotech started to catch a little fire, and that's a group that we want to continue to watch for sure. Let's see, real estate, another one that really was not performing well yesterday, but remains in this sideways consolidation. Really nothing bad going on here. Utilities dropping, has been throughout this rally. That's fine. We're still in an uptrend, still above the 50-day moving average. No problems there. Really the two laggards in my view, energy and materials. And the big problem with both of those groups is that we've had a dollar that has been rising for 8 years. So as long as our economy here in the U.S. is viewed as being stronger than global economies, then I think our dollar is probably going to remain relatively strong. And that is going to, unfortunately, put a little bit of a lid on energy and materials as it has for the past 8 years. So we want to continue to maybe stay away from those groups in the near term. I think that materials in particular could perform maybe with the market or at least move higher. I don't think this is going to be a leader. Energy, on the other hand, I'm not sure if the dollar will give it, the dollar is going to present some headwinds for sure. And I just don't know if there's going to be enough fundamentally within that group to carry it much higher. I see more sideways action for energy. If we really get moving on energy, I would think it would be the fourth quarter. If the global economy starts to show signs of picking up, you would think that would maybe boost crude oil and maybe we'd get a little run in energy. But I think the longer term picture remains a little weak for both energy and materials. The 10-year Treasury yield. Now, this is interesting. Before I even look at this chart, I want to show you economic report that came out. This is over at Econo Day, but this was the retail sales came out just about 30 minutes ago. The actual retail sales dropped 0.3%. Market expecting a rise of 0.3. If we strip out the autos, the retail sales lost 0.1%, which again fell short of expectations. What this tells me, and I'm looking back at the 10-year Treasury yield, 10-year Treasury yield, I would have thought with bad news, economic news like that, we would have seen a big drop. We're down 3 basis points, but it's not a huge drop. If the 10-year Treasury yield doesn't go down with bad news, I think that that is another sign that the stock market's going to go higher. Because one of the things that would keep the stock market from going higher is for those that are nervous and those that want to be more defensive, staying away from stocks and moving into treasuries to drive that, and that would obviously drive the yield lower. We're not really seeing that much. We saw a little bit. Let's see how it goes throughout the rest of the day. If you're in the camp that we continue to consolidate or maybe even go lower, you need this 10-year Treasury yield dropping. If this 10-year Treasury yield, remains strong and breaks out above recent highs and starts to make a push for 190, or better yet, from a bullish stock market perspective, better yet would be a breakout above 190. If you get a move to the upside on the 10-year Treasury yield, you do not want to be shorting stocks, in my opinion. That would be money rotating out of the Treasury market, and that could help fuel a major breakout in the U.S. stocks. So just a few things there to think about. Again, with this retail sales report coming in so poorly, though, I would suspect that this is going to be suspect that this is going to be an opportunity for the market to rise. I want to get into one other thing here. Let me trying to check one other thing out here. Okay. Earnings are going to be a big part of this. I just mentioned I thought earnings would be a major catalyst, or could be the major catalyst to drive prices higher. We're basically getting some really good reports coming out early. We already saw mostly beats yesterday, especially in the banking area, with JP Morgan coming through with a huge report. Also healthcare, which had been weak. Healthcare providers had a huge day yesterday, actually even better than biotechs. Healthcare providers, I think, were the best area of the market, gaining about 5%. And one of the reasons why, and I'll pull up that chart for you. You can take a look at that while I'm going over some of these other earnings reports. But look at that move that was made yesterday in the healthcare providers, up more than 5%. United Healthcare came out and just absolutely blew away their estimates and raised guidance. So that was definitely a catalyst for that group. I believe we're going to see a number of areas of the market that have catalysts like that. So that is why I am believing that we're going quite a bit higher in the market. But we do have to negotiate that overhead resistance. We can't just assume it's going to be taken out. We need to see it be taken out. And then I also want to see the transports moving. Transports, the last 5 to 7 days, you can see beautiful moves up here almost every day. Even the days where we gap down or we moved lower, you can see 2 of these days had hollow candles. I think what we're seeing here is some accumulation in the transports. And so this would be just further confirmation if transports continue to rally. We had a lot of failures at the end of September around 10.5 after we had moved down. You can see these tails getting up into the upper 10.4s to around 10,500. I think a move through 10,500 would be very bullish. The other thing is there was an earnings report that came out last night, JB Hunt, and I was expecting a big report out of JB Hunt. They did beat on their revenues. They came in better than expected on revenues, but they fell short on their earnings, $1.40 versus $1.44. Not sure how the company is reporting or is trading this morning, but I did want to bring up the truckers because the truckers had made this breakout above the double top, pulled back, put in a hammer just below the moving averages, and had come roaring back. So I was looking for maybe a big report out of JB Hunt to carry this index higher on the truckers. Don't know if that'll happen, but it would be really good news if the company comes up short of its earnings estimates and the group still goes higher. That to me would be further confirmation that the transports are gaining steam and that buyers are there for any dips. That's been the mentality for the last 2 weeks here, and we want to see if that continues. All right, so let's talk about some individual earnings reports. I just mentioned JB Hunt, so let's look at that chart. JB Hunt, I'm going to put it on this relative chart. The reason I like JB Hunt going into this report is that it looked to me like it had bottomed. This downtrend relative to its peers had ended. We came back up, took out this high, pulled back, put in a higher relative low, then went up and put in a new relative high. So it looked like we had a nice uptrend in play. It may still continue, even though they came up short on earnings. Again, I haven't seen any pre-market action on the stock. But I do think that a continuing move to the upside would be bullish, not just for JB Hunt, but for the truckers more specifically, and transportation stocks in general. UAL. UAL came out with a nice report. They did come up a little short on the top line. Bottom line, though, 407 versus 394, and they guided their fiscal year 19 earnings per share higher. So a little bit of a mixed picture on the revenues and earnings, but they did guide higher. I think they may run into a little bit of resistance up here around 91, 92. If you can get through that, then I'd be looking up closer to that 96 handle. SNBR, this is one I featured in the sneak preview of earnings the other day, and a report that I thought was going to be bullish. Had the huge move on heavy volume back in July, pulled all the way back through gap support. I thought the volume was kind of light, and then we started moving up and taking out these levels with increasing volume. And look at the relative strength so far in October of Sleep Number versus the Furnishings Index. Beautiful move up here. It looks like it's beginning to regain its strength. They came out, they blew away their top and bottom lines. $475 million on the top line. The market was expecting $462 million. And then bottom line, 94 cents versus 81 cents. Huge beat. Then they went on to raise the lower end of their guidance higher. So there was really nothing bad about this report. I did see the stock was up a couple bucks, I think, after hours. So we'll see whether or not that translates into a breakout. But I do think it's going to make a run up here for $52 and see if we can get that breakout. Bank of America reported this morning. Another solid report in the banking space. Easy beat on the top line, easy beat on the bottom line, 56 cents versus 50. Didn't see guidance, but I suspect that Bank of America is going to make a run here. We'll see how it opens today and how it trades throughout the day. But I would be looking at 30.5 to 31 as your key area of resistance on Bank of America. Abbott Labs. Abbott Labs reported they came up short on revenues, matched earnings estimates, so not a great report. Looking at their relative strength, Abbott has been a pretty good performer heading into, was this July versus the pharmas. But since then, pharmas have just been going sideways, which means they've been underperforming the S&P 500, and Abbott's been a weak performer in the group. So there might have been a little bit of, maybe the market was kind of giving you its own forecast of what was going to happen based on this relative weakness. Abbott did not perform very well with its earnings report, just matching estimates on the bottom line and falling a little short on the top line. Another one that did surprise me, though, was in the semiconductor space. ASML, I think the stock's down I want to say maybe a few dollars after hours. I think it was down to 264 last time I saw. But they came up short on their revenues. They did beat on their bottom line, though, $1.66 versus $1.60. But as many of you know, I only look at stocks to trade that have beaten both top and bottom line. So ASML, JB Hunt, no matter what they look like on their charts, if they don't beat top and bottom line, they will not be on the strong earnings chart list in the next quarter. But I did want to mention, because this was in the semi space, semis have been absolutely on fire of late, and we're getting close to a key area of resistance. Got to try to get through this 3850 to 3900 area. Yesterday, we had a beautiful day, moving up more than 2% and clearing 3800 on an intraday or on a close. Intraday, we got as high as 3826. So we're getting close. A breakout in semiconductors would certainly add to the bullishness in the overall market. All right, a couple more banks here. USB, they did beat top and bottom line. Bottom line, $1.15 versus $1.11. This is a stock that had been downtrending just recently versus the banks, but this report really didn't look too bad to me. I would imagine we'll go back up and challenge this 55, 56 area. And then PNC. PNC also beating across the board, beating top line, beating bottom line, 294 versus 280. This could be a breakout day for PNC. Love this one. I mentioned it just broke out relative to the banks earlier in October. I think Wall Street was favoring this stock, and this is one of the reasons why. Beautiful beat, and I believe we will break out today on PNC. All right, those were the key earnings reports that I wanted to go over. A couple of other things that we can talk about. Up first, upgrades and downgrades. Want to get into that. And the first upgrade I had, I mentioned it, I think yesterday, on Trading Places Live over at Stock Charts TV. BMC Stock Holdings. This is in the home improvements group. You can see home improvements trying to make this breakout. I believe BMCH has been one of the stronger stocks, even though it had been weak the last 2 months. But you have to understand it's just consolidation after a big move to the upside. Stocks are not going to go up every day. This one did pull back on a relative basis while it was consolidating. Got an upgrade yesterday. It's getting another one today. I would not be surprised maybe if we get that breakout. We want to see it stick, though. We want to see a closing breakout, and getting it above yesterday's high at, let's just go for 27. Close over 27, I think would be very bullish here. Johnson & Johnson, J&J, upgraded. The stock tried to make a breakout with its earnings yesterday. Didn't get there. Maybe the upgrade does the trick. We need to get a close over 134. PSTG, this is Pure Storage. Stock did get upgraded this morning. I'm going to see whether or not I can get through about 18.5. So we do have a nice uptrend. We do see the volume beginning to pick up a little bit. It is off its worst levels, although over the summer, this was a very, very poor performing stock relative to computer hardware. We're starting to see it pick up, and computer hardware has been strong. If we go down here at the bottom, you'll see computer hardware relative to the S&P 500 has been on fire. So an upgrade here, if we can get the breakout, I think above 18.5, I really don't see anything until we get up to maybe price resistance at 20, and maybe that gap resistance looks like it comes in maybe around 2060. That close was 2060. So 20 to 2060 is where I think this stock could run if it can get through that earlier price resistance right here, and that is 1845. Let's go to the downgrades. Adobe was downgraded today. This is in the software space. They're in a lot of the cloud computing. Adobe did get up test its 50-day moving average. I mean, from a bearish perspective, it's been in a downtrend. I'm actually going to pull this up on a regular chart because I want to see if we had a positive divergence on this low. It looks like maybe we were slightly higher on the PPO with this lower low in price. That normally means 50-day test, centerline test, and then reevaluate. So unless we can break above the 50-day, at this point, I would be, short-term trading. I'd be out of Adobe. Don't really like this one until it can begin to show that it is uptrending. Needs to get through that 50-day. We need to see some volume. So far, that has not been happening. And when we look down here versus the software group, Adobe is at a 52-week low relative to software. So this is not the kind of software stock that I would be looking at. I want to get stocks that are outperforming. Look at Microsoft, some of the others, Coupa Software, COUP. There are many software stocks out there that are outperforming their peers. I would stay away from the ones that are underperforming. Costco, downgraded. How dare someone downgrade Costco? I love Costco. The shop there. But I also like the chart. I was talking about this one a couple weeks ago. I know on the daily market report, mentioned this one when it came down to the 50-day testing this price support area. Let me annotate it just so you can see. That was a great reward to risk entry point right there. So that was the prior high at about 282. You can see after we had broken out on heavy volume, got up to almost 310, came all the way back down 282, hit the 50-day moving average and price support, and it bounced as I would have expected. Now with the downgrade, maybe it brings 282 back into play. I think Costco's uptrending sideways, consolidating right now. So weakness after downgrades, anything back down close to that 282 level, I think would be a great reward to risk trade. So let's get out of this one. I want to show you one other one. I believe this also is a company dealing with the cloud. And this is NOW, ServiceNow, also in the software. And this stock, not as bad as Adobe, but it did top on a relative basis back in July. And I'm going to pull up I want to annotate again here because I want to show the relative support line. You see how we went up, came back down, set this relative support right there, and then went to a new high? Well, I like to hold these relative support lines, and so far, ServiceNow has held it. So I'm not as bearish this one as I would be Adobe. You can see we're breaking out above the 20 and the 50. Closed yesterday at the highest level in about 2.5, almost 3 months. Maybe, maybe 10, 11 weeks. Anyhow, I think the downgrade, you might get maybe a chance to get this one on maybe a 20-day test. This one, I'm a little bit more bullish than Adobe. All right, and those are the earnings that are the upgrades and downgrades that I wanted to go over. So now I wanted to go into relatively speaking. And again, I want to go back, and one of the things I do on stock charts is I go into my dashboard and I look at sectors and industry summaries. I'm going to start with the sector summary. And on this other chart over here, let me pull up the S&P 500, because I just want to show you when I'm looking at the summary, the sector summary, I'll look back and I'll say, okay, there have been about 9 trading days here. Well, certainly since this low, there have been 5 trading days. So we've had a really strong week right here since last week's low. So I don't keep track every day and say, okay, now technology is up X percent versus the S&P 500. But if I look at this, I could probably do a quick calculation. We closed at 28.93 and now we're at 29.95. So we've gone up 102 points in the last 5 days on the S&P 500. And so that would be better than 3%. That's about 3.5% that we are up on the S&P. So now I'll go over to sector summary and I will pull up a 1-week chart here. And what I see is, and I'm looking to see what has been doing better than that 3.5%. And so consumer discretionary has been going along for the ride. Here is communication services, which is an aggressive group. Industrials, an aggressive group. Technology, an aggressive group. Financials, an aggressive group. The laggards, check out what's lagging here. Real estate, consumer staples, utilities. This is what I mean. When the market starts to move to the upside, that's when I want to look for leadership. I don't pay any attention to defensive stocks leading when the market is consolidating or going down. Defensive stocks always lead when the market goes down. Always. I have yet to see the 5 aggressive groups lead the stock market when it goes down. Maybe at the end of a bear market, you might start to see some of that rotation. But when you're in an uptrending market like we have been for 10 years and we pull back, I can almost assure you that when we pull back, these 3 groups are going to be up at the top or close to the top. What bothers me is when the market's rising like it has for the last 5 days and these groups lead. That is not the case right now. Now I can go over here to the industries, go to the table view, and then pull up the 1 week. And check out what's leading here. Internet. Well, all of a sudden, we've been talking about internet, how it loves the month of October. Internet's starting to pick back up again. That is a good sign. As I look down some of these others, just trying to get a glance. I'm actually looking at this with you all. I haven't really done this in advance today. One thing I will note is restaurants and bars. If you're owning any restaurants, I own Chipotle, I own Shake Shack. You'll notice they really haven't been doing much. It's not really that those stocks are necessarily bad. Their groups are not doing anything. 10-year Treasury yield's been rising. That's causing some profit taking in home construction. So there are things that are just changing in the market, and we want to continue to change with it. Now, do I think this is a long-term problem with restaurants? No, I think restaurants will be back. But it's, this was a group that outperformed for a long period of time. And I think sticking with the leaders, I know Chipotle still trading at near or at a 52-week relative high to the restaurants. So even if the restaurants go down, the best of the best tend to stay, pretty well intact. Going back down now, you can look at a group like tires up 11% and think, wow, maybe I should jump into tires. Well, look at the downtrend that's been in play for a long time. I'd be careful with a group like tires. Let's see, here's banks. This could be the big story of the fourth quarter. If 10-year Treasury yield keeps moving up, and let's not forget that the Fed is now announced a program where they are buying the short-term T-bills, and they're going to do it to the tune of $60 billion a month for the next 6 months, roughly, a minimum. What they're doing, and they've said what they're doing, is they want to increase that yield spread. Well, who benefits from that? Nobody more than banks. So you've got the Fed supporting banks right now. This is going to be a group we want to watch and probably going to want to trade in the fourth quarter. Stick to the leaders. And I've been talking about many of those leaders. But you come down the list, there's your healthcare providers. Had a huge day yesterday, which is why the last week's been so strong. Industrial suppliers. Why would industrial suppliers be going up if the market was, if the economy forecasted ahead was going to be weak? I can't tell you. I don't know why. All of these groups that are outperforming that 3.5% rate that I talked about, pretty important. Trucking, railroad, two important components of transports have been outperforming. Transportation services, commercial vehicles and trucks. These are areas really important that would help support a bull market. So one last thing, just down here in technology, and we're going to move on to the three you must see. Semiconductors, big move here. Computer hardware, software, outperforming. So these are all areas really important to see outperforming the S&P 500. All right, let's move on to the three you must see. So for today, well, with that awful retail sales report, I thought maybe the first thing we should do is take a look at the XRT, which is an ETF it's a widely diversified retail ETF. And so let's pull this up. And you can see we've been in a downtrend. Today's report is not going to help the group. I can't imagine. But what I would simply be watching is the recent high and the recent low. Which one goes first? So up near 44, down just a little bit below 38. You can see this double bottom. We do not want to lose this low down here. That would be the 2019 support. It's been tested twice. I would even be a little concerned if we lost about 40.75 or so. So probably not going to be a good day today, but let's wait and see. And that is your first three you must see. Second stock that I'm going to bring up today is KMX, CarMax. This is one of the stocks in our portfolios. Loved the breakout yesterday on increasing volume. This is in the retail space, though, so it might be a little bit of a short-term head fake. But if I pull up the relative chart, you will see the leadership in CarMax breaking to a new 52-week high versus the specialty retailers, also versus the S&P 500, even with the group overall dropping for the most part. This is a tremendously strong stock. So two things I would watch on CarMax today with the retail sales report out. Number one, can it hold on to this breakout? I think it'll be down a buck maybe early. We'll see what happens. I haven't looked to see what it is, what it's doing in pre-market. The more important thing that I would be watching, I think, is the rising 20-day moving average. Those are the two levels that I think are really important on CarMax. If it holds that price support area around 91 and then breaks out to another high, that would be very bullish. But I would even give it down to the rising 20-day, given the poor economic news out in terms of the retail sales. All right, so that is number two for the three you must see. And my final one is another retailer. And I tell you what, this one is starting, if you like bottom fishing, I think Nordstrom's could be starting something here. And the reason I say that, look at the volume. I mean, we've had little pops to the upside before, a little bit of volume there, not much volume in here. But after getting all the way down to $25, this move right here, look at all the volume coming in. I think the stock has made a little character change here. I'm going to go out just a little bit longer. I'm not going to annotate this one because I won't have time. But you can see if you connect these highs, you see this downtrend that was in play. I think this volume breakout is a character change on this chart. And I believe another breakout is in store. Now, with, again, retail sales coming out weak, maybe we get a 20-day test. But if you see the stock trading much above 36, 36.5, and the volume picking up, I think it could be the next leg in an uptrend on Nordstrom. So I think it looks good. So those are your three you must see. Really want to thank you all for stopping by. Always a pleasure. I love doing these shows. Give you some opportunities of things maybe to look for. Please remember to tune in to Trading Places Live from 9 to 9:30 Eastern, Mondays through Thursdays. You can find me on Stock Charts TV Tuesdays and Thursdays, and right here at earningsbeats.com on Mondays and Wednesdays. Be sure to check out my blog, Trading Places with Tom Bowley, every morning, as I'll try to provide webinar links, at least from time to time. Have a great Wednesday, have a great Thursday. No, what is today? Today is Wednesday. Have a great Wednesday, everybody, and happy trading.